Hi, everybody. Today was definitely not a good day. This is the opposite of everything you want to see in a healthy market. What we saw today should have everybody's. If you're very bullish here, you need to go ahead and rein it in right now. I wasn't as bearish on today's price action at the end of the day until after I went through my scans. All the little speculative stocks that should be running here if this market is ready to take off are completely gone. All the failures I received today, my 100% sells, were in BIOF, GIGA, and what was the other one? MXWL, because we had to get rid of that one. I don't have my notes in front of me. So those are all 100% sells, and then 275% sells was MVIS, and then also, gosh, think ZBB. And I'm only letting those hold on because they're still above the open of my first signal day. So I'm going to go ahead and give these a little bit of one more day to go ahead and prove themselves before I completely get out, because it is possible this is just a short-term pullback, which will allow us to build handles in stocks that we want, like Tesla and SCTY. However, and even maybe SPWR, another like handle area that you can get long off of. But for right now, caution has to be raised. And the biggest problem with it comes that we got an intraday breakout early on. The breakout was extremely bullish looking, and then boom, we got slammed back to the open below the breakout levels and closed on higher volume, well above average on the NASDAQ. So that is some very, very bearish action. New York Stock Exchange reversed also. Volume was below average but still strong. All of this needs to leave everybody cautious. So that being said, I have about 3 to 4% capital left in my account. So what I'm going to do in the retirement account is I'm going to add to my SRTY remaining hedge. I still have hedges on from March and April. They're very small, but we're gonna add to that here as we're bouncing off the lows and reversing on the SRTY and reversing off the highs in IWM. Bottom line, like I said, this could still be a short-term pullback, but this is also how real pullbacks start. You can see in January how far we pulled back. You can see in March how far we pulled back. So it wouldn't surprise me if we do this too. We're not as overbought as last time, so we may not sell off as much. And like I keep saying, that could create handles. But you should be completely neutral here, even though our models are still all under buy signals, even though we just had house cleaning sells like WAG was 25%, HUN was 25%, all of our oil stocks. And see, that's the other problem for me. All of these these oil stocks that we got to sell, PXD, CLR, EOG, these were all my early longs when the rally started. And along with that was WAG became my biggest long position at only 10%. And here it is giving another sell signal. So we have all of our early longs that are making money for us giving sell signals now. And now we have all of our new speculative longs failing. That is a sign of a market that wants to pull back. So defensive measures must be taken here. I wouldn't say that we've definitely topped. Remember, is the yield curve inverted? No. Is it still zero interest rates? Yes. So as long as we have a very low short-term bond yield, and as long as the yield curve isn't inverted, it would be foolish to think that we have a serious market top here. However, another flash crash? Sure, why not? I mean, anything could happen. A heavy pullback to the 200-day moving average in these indexes? Yeah, absolutely. And then we'd still have a technical uptrend if we connect the lows of April, May, and move it across the way. So let's just go ahead and do that now. So even if this market pulls back to the 200-day moving average, it'll catch up to that red line I just drew, and we're still trending up. But that's going to be about a 200-point loss on the NASDAQ. I don't know how many people can just sit through that. So it is going to be time to add hedges. If you are heavily long, I don't recommend just selling. I recommend adding hedges here just in case it does get worse. As you can see with the MACD and TSV in the middle window pane and bottom window pane, they are rolling over on all of the indexes. None of them are trending up now. So this is a red flag that the market probably wants to continue to pull back further. Overnight futures are even lower. If it was more of a one-day thing, I would think that futures are higher. So if we open up higher, we'll get good sells. If we end up closing below the low a day today, we're going to have to add more to our hedge and definitely take more profits in the signals that we get to take profits on.